Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the macro view for Bitcoin. We'll be taking a look at the on-chain metrics, giving everyone a brief update on what is going on with wallet counts, inflows, outflows, and all that wonderful stuff. We'll be taking a look at the charts at the macro level, daily and weekly, and taking a look at what's been going on there, and give everyone a brief update as to what I think the outcomes are likely to be. Now, as I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe. By doing so, you will stay up to date with all the videos that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Okay, let's just get straight into this one, right? We are going to probably start off by taking a look at the on-chain data, and then we'll jump down into the charts afterwards. So let's start right up here. We can see that there is a significant surge with the inflows. Okay, we can now see that there's 44.61 thousand more going onto the exchanges since the 1st of January 2023 to yesterday, right? So basically we know that there's a significant increase in the amount of Bitcoin flowing to the exchanges. So just to summarize this, from the 1st of January 2023, we've seen 3.2409 million going onto the exchanges, and we've seen 3.1963 million coming off the exchanges, meaning the difference is that 44.61 thousand has remained on the exchanges. That means more Bitcoin flowing to the exchanges, being made available to be sold. This is not to say categorically that all Bitcoin going to the exchanges is going to be sold. It is just to note that it is moving and flowing to the exchanges. Now, you typically would only take it from an external wallet, such as a warm wallet or a cold storage unit wallet. You're only going to move that to an exchange if your intention is to sell. You don't typically move it to an exchange and then just move it off the exchange. Sometimes it happens, and so it's not an exact science, but this is a bearish indication if we were to just kind of follow the logic that you only move to exchanges when you want to sell. And when you buy it, you want to remove it from the exchanges, and that's bullish, right? So if this was a negative number, we'd be bullish on it, and it's a positive number, so therefore it's negative, it's bearish. And we can kind of see this on here. We can see an increase of Bitcoin going onto the exchanges pretty much since basically December 2022. We can see it's been flowing on. You might be thinking, well, why has Bitcoin been flowing onto the exchanges and yet price has been going up? And it's all about balance of supply and demand, okay? Just because it's gone to the exchange doesn't mean that it's there for sale. At the same time, we have to consider that going to the exchanges could be a number of different reasons. One could be that it's being used to manipulate the market. Second is it's just there to be sold. And third is they've just decided they're going to store it on the exchange rather than on an external wallet for whatever reason. So there's many different reasons for it. One of the things we have to kind of consider, though, is the most probable, which is that it's flowing to the exchanges to be sold. And so therefore price has been pushing up because there's this narrative out there that we're in a bullish market, but the data, the very underlying data of Bitcoin moving around, is actually indicating the opposite. We don't typically see a lot of inflows going on whilst price is moving up. This being said, it is exactly what happened in January of 2019. We did see more Bitcoin flowing to the exchanges than what was coming off the exchanges. Okay, so it is still very similar to the previous start of the bullish market. So I don't want to kind of just give you one narrative here and to say that it's incredibly bearish. It mirrors very similarly what was going on in 2019, which was bullish. But there are some things that we have to consider here. Okay, so in the 2023 example, we can see that there is a significant surge in the way that these inflows to exchanges are increasing, right? We can see this here. We just went through it, 3.2409 versus 3.1963. Okay, now in 2019, this number is actually significantly higher. Let me actually just make sure I've got the correct date range on here. Yeah, we're just 1 day behind. Let me just go ahead and put that on. There we go. So this one represents the 1st of January 2019 through to the 21st of April 2019. Okay, we can see 5.4042 million going onto the exchanges and 5.3866 million coming off the exchanges. This shows us with about 20,000 Bitcoin difference between these two numbers. So we can see that there was still more Bitcoin flowing to the exchanges, but the price action was still going up. And of course, it was bullish because we have the data to look at, and we can say, yeah, we started a bullish market. Yet we did see a very significant downturn, okay, towards the end of 2019. Okay. We didn't come down into new lower lows though, okay, but we did come down quite a bit. Now, the main takeaway here is that we have significantly lower volume going on and off the exchanges this year, okay, about 20% less, 40% less this time round versus last time. Okay, so in 2019, we're talking about 5.4 million versus this year of only 3.2 million. So we're significantly lower on volume. Now, I know a lot of people want to kind of look at this and say, well, price action of Bitcoin is significantly different. And I kind of went through this the other day to say that, if you invested $1,000 in the previous bull market and you turned that into $50,000, you're not going to only start with $1,000 in the next bull market. You're going to probably start with 10,000, maybe 20,000, a lot more than you were initially starting. So to think of Bitcoin investors basically only invest in the same dollar value every single time, I think is a rather foolish statement and something that we need to actually kind of steer clear of, because that's not really how investment mindsets should actually work at these top levels. Instead, they think of it as a percentage. How much percentage of their net worth are they investing in certain types of investments, high risk versus low risk and all that kind of stuff, different types of markets. So actually, if they've been increasing their net wealth, then they're going to take a significant percentage, let's say 10% of that net wealth and put it into Bitcoin, then that net wealth, as it increases, that percentage also increases in terms of dollar value. And so when we see a decrease in volume like this, it's rather unusual, because if you've been in Bitcoin for a while and you've been basically increasing your net wealth, you would expect volume to be increasing, not decreasing, or at least staying reasonably static or close, not a 40% difference. It's rather unusual activity. Okay, and I've kind of been talking about this for a while, how we have 3 million versus 5 million. It's an unusual thing to kind of consider. I'm not saying that this is categorically going to be the only way that you're going to be able to say bullish or bearish. This is just a piece of data that I find interesting and that I think we should acknowledge that there is a difference here. Even though we have very similar percentage gains from the 1st of January 2019 and the 1st of January 2023. They're like very similar setups in the way that we have, slightly more Bitcoin flowing to the exchanges than is coming off. We have the very similar percentage gains over that period of time, but we don't really see the significant volume that we used to see. And that is also interesting. It goes in line with all the other variables and data that we see. Not to say that this is categorically going to be the only thing that we're going to use to build a bearish case, but it's a piece of data that helps us paint a bit of a picture. So moving on into wallets, what do we see? And we see something unusual. This is something that was not happening in 2019, okay? And we can go back and we can take a look at this because, everything's on the blockchain, you can verify it. And we have wallet count data, and we're going to be referencing the wallet count data. Now, these wallets are just showing the number of different wallets there are with a certain number of Bitcoin in them, okay? So in this particular example right here, we have Bitcoin that is over 0.01 or wallets that are over 0.01 Bitcoin per wallet, right? So every wallet in this count is basically or has at least 0.01 Bitcoin in there, right? And we can see that there are over 11.7 million wallets with over 0.01 Bitcoin. And we can see that these are increasing, okay? And they've been increasing for quite some time. Now, if we go over into our retail size wallets, again, this is basically Krill, which is over 0.1 Bitcoin per wallet, Shrimp over 1 Bitcoin per wallet, and Dolphins over 10 Bitcoin per wallet, okay? Now, the interesting thing here is they are all FOMOing in, right? They're very emotional in the way that they're approaching the market. Price action generates either fear or greed, right? And what we can see here is that for a very long period of time, retail investors have been buying into Bitcoin, okay? And I mean a very long time. It's been happening during the entire bear market. Now, that is something that had not happened, or we're in a scenario which did not happen in 2019 in a similar way that we have right now. And so I'm going to just show you the Shrimp wallets now, okay? I'm going to come over into the Bitcoin Shrimps from the 2018 to 2019 scenario, right? So we can see that the bottom comes in here and the new bullish market starts on the 1st of January, let's say, 2019, right? We can see that these retail wallets are on the increase. But before this low, these retail wallets were decreasing. The number of people who had 1 Bitcoin was on the decrease, okay? And it was decreasing and selling into the actual low point, okay? Even though they actually started to accumulate right down here, they did actually come down just a fraction further before it starts to take off again in terms of price. So it's important that we understand the orange line is price action, the black line are the number of wallets that have over 0.1 Bitcoin in them. So we can see that the retail investors during this bearish market of 2018 were buying up every dip known to man, right? Up until they get to this flat period right here where they start their selling period. Okay, they start selling into the lows because they believe that unfortunately it's a scam or whatever, right? And we can see that they're coming out of their positions. And then they start accumulating again at the bottom here. Okay, now at the same time this is happening, you have the whales buying this flat period in time. Whales are buying this flat period right here, and they're not really participating during the bear market. Okay, and they're buying into all of this dump right up until this very last little surge. You see this massive spike to the upside here. This is all driven from the Kraken size wallet, okay, which is accumulating during the bear market to flood the ecosystem right around here. And it's essentially just a transfer that's going on. They're using the Bitcoin to create an imbalance in the supply and demand metrics, and then your whales are buying up from there as well. As soon as that bottom comes in, you can see how these guys start to cool off a little bit and then accumulate again. And the same with the Kraken size wallet, you can see they start accumulating again right here. Okay, so they're just using this to flood that market and bring us right in. Okay, and then of course you have your retail investors which are selling their Bitcoin to the whale investors. Now these are important things to understand because when we take a look at what's going on, most recently, we can see and acknowledge that there's a lot of FOMO action. And have we seen any retail investors selling their Bitcoin to the whale investors? And unfortunately, if I find the current sharks, no, this one here. These are your retail investors, right? You can see during all of these downward movements, they've been doing nothing but accumulating. They have yet to actually sell their Bitcoin to the whale investors. And that means that the whale investors cannot come into the space. They've been just coming out. So we know that there's a continuation of selling pressure occurring here at these higher levels, these 1,000 Bitcoin per wallet levels. We can also acknowledge that the Shark wallet investors are also heavily manipulating the market or trading the market aggressively. And we can see that these guys pump the market and dump the market very aggressively as well. So we have to understand that when it comes to the price action, okay, whether that is at the retail level like this or at the institutional level like this, we have to understand there's a buyer and there's a seller. There's always someone buying and there's always someone selling. You cannot have a buyer without someone selling some Bitcoin to them, right? So it's important that we understand that a lot of retail investors have been buying and a lot of institutional investors have been selling. Now, we have to ask ourselves as retail investors, who do you think is on the right side of that trade? Do you think that the billionaires and the multimillionaires, the institutional investors, are wrong to be selling their Bitcoin to the retail investors? And if so, then you believe the retail investors are on the right side of the trade and it would go into the moon. Alternatively, you could argue that maybe this is the biggest bull trap for Bitcoin in Bitcoin's history, and what we're doing here is actually just trapping out a load of bulls because the whale investors, the institutional investors, the smart money is correct, and all they've done is grabbed a whole load of liquidity from the retail investors. I'll leave that for you guys to decide. But when there's things that are going on at these kind of levels, I find it incredibly interesting. We follow the money, and the money tells us that essentially price action is probably more than likely going to decrease, because we want to see, and we need to see, big smart money coming into the space if we want to be thinking about Bitcoin hitting 100K, for example. And we also can acknowledge that our volumes are significantly lower than they were previously, a 40% reduction, and we're trying to call this a bullish market, right? So in the 2019 bullish market, okay, on the 1st of January, we saw a 40% more Bitcoin being moved around. Not to say that it was all just kind of, being transacted upon, but it was moving. People were getting involved in, Bitcoin. And right now, we don't see that. We see a 40% reduction on that activity of moving Bitcoin around to and off the exchanges. So it's hard to think that we're in a bullish market, even though we've moved up significantly based on the volume side of things. But we also found it really difficult to think that we're in a bullish market when big money isn't coming in like it was in 2019. In 2019, the pumps to the upside were driven from these smart funds, whereas right now it's being driven from retail and some of the traders in the space. And I think there's a lot of manipulation in pushing that price of Bitcoin up higher. So when we take a look at our on-chain data, it makes me incredibly nervous. But it doesn't just stop there. We jump down into the charts. And what do the charts tell us? Well, the charts tell us that we don't have a trend to the upside. Now, this isn't a be-all and end-all of anything. We don't have to see a trend to the upside. It can be corrective to the upside. But it doesn't give me confidence. Looking at everything on-chain and knowing that we don't have an Elliott Wave theory trend on our daily chart, for example. And I know there's going to be conflicts with people because there are people who are drawing Elliott wave theory differently, but I don't believe that they are following the rules correctly, because the rules are very black and white and they're very specific rules that have to be followed. And I've gone through this a dozen times, right? Down here, this is not... Okay, 1, 2, 3, 4, 5. It doesn't follow the rules of a 5-wave structure. This is not a diagonal. There is no diagonal that fits here because wave 3 cannot be the shortest wave. And that's under either a expanding diagonal, a contracting diagonal, a leading diagonal. Okay, none of those fit that particular scenario. This means that we can't think of this as a wave 1, 2, 3, 4, 5 kind of scenario. Anything like that doesn't fit. It's not what's going on. So all of this is actually corrective. It's a string of corrections being strung together, and it still has potential to push up a little bit higher, but we have started to turn. And this turn to the downside is actually looking pretty sinister. Okay, if we jump down into this, and we've been through this on the smaller time frame stuff, we know what's building here, is we do have a potential wave 1, wave 2, wave 3, 4, and 5 coming in. This could be deemed a pretty bearish situation, because if this turns into something a lot more, such as 1, 2, 3, 4, 5, then of course we're going to be talking about coming down into these low levels that we've been talking about for a while, specifically a Z wave between 11,600 and 18,400. Now that could stop there. It's unlikely that it would though, because a Z wave should be a zigzag. And so therefore, if we're to see a zigzag pattern here, we might get a small relief, only then to come down deeper once again. Okay, so we have to be really cautious here, specifically around the patterns of data that are forming from an Elliott wave theory point of view. Okay, so as much as I'd love to think of these movements that we're seeing to the upside as bullish, that's not really what's going on. Right now though, on the daily chart, I am expecting a bit of a relief. And the reason for this is we're finding support here on our 50 EMA, and I'm looking for a fourth wave movement. 1, 2, 3, I'm looking for 4, and I'm looking for 5, right? So we could probably lose that 50 EMA briefly and then rally up a little bit, because I would expect us to move up here a little bit and then move down again. If we start with 5 waves, we must end in 5 waves. You kind of get the idea. Best case is a zigzag pattern, probably testing the 200 EMA. So when we're taking a look at this thing, we have to kind of consider, okay, not only is our on-chain data now really clear is kind of mud, I guess, depending on how you want to look at it. To me, it's clear as day, that we should be thinking negatively about the price action. Don't get me wrong, though. We are looking for some kind of relief rally in places. It's not going to be a straight line down. And when we take a look and take into consideration the fact that we are higher highs, higher lows, these have a tendency to break down. You can see this breakdown right now. This was a ticking time bomb for a move to the downside. That's why I've been talking about it for a very long time. Now, admittedly, and I'll admit when I'm wrong, I was not expecting us to push up higher than this 25k area. Yet we did, okay? And again, this just symbolizes to me the level of manipulation that is going on. Now, from a smart money concepts point of view, you can see the fair value gaps and how they've been stacked up here. Again, this is unusual activity. You wouldn't normally expect to see a stacking position like this on fair value gaps. You've got to understand what causes a fair value gap. Basically, this is a big buy order coming in down here at the bottom, okay? And unfortunately, they're unable to fill it. So price wasn't actually fully, or so they didn't fill their orders until it kind of got to the top of this gap, right? And as such, that institutional buyer or that smart fund coming in here wanted to pay 20,600, ended up paying, you know, 21,700. What are they going to do? They're going to turn that money tap off and wait for price to cool off because they wanted to buy it down here, not up here. Yet we are seeing these fair value gaps, these imbalances in the order books getting stacked up. That causes me another concern as to why I'm thinking manipulation is afoot. Because again, you've got another buy order at 22,100, and then they're paying 24,000. Then they don't call off there. They then go up and they place another order at 25, pushing the price up towards 26.5. And so when I see these getting stacked up like this, it just tells me that I should be really cautious. This doesn't feel natural. Okay, and we can start to see that we're starting to pull back down and we're going to fill these gaps out, in my opinion. 19,000 on the daily is this last gap, but if we come up to a weekly time frame, you can see there's a gap all the way down here at $17,000. So caution is kind of the word that I want to use. Now, not only do we see that, also on our weekly time frame, we can see that this previous area of demand right up here has now turned into our area of supply. Just imagine this. You bought over here when you were revisiting this previous area of support, and you got stuck. Price came all the way down here. Now you've kind of got back up into this area that you paid for it. Are you going to come out of your position now after a significant surge to the upside and come out neutral and wait for lower prices? Or are you going to sit in your position that you've been stuck in for a while and maybe you're hoping to see some green? Generally speaking, the reason that a support line turns into a resistance line or a demand area turns into a supply area is that people who were trapped in it start to sell when they get into cost neutral positions. And so that's why you generally find yourself in a situation where you get rejected. And right now you can see this as clear as day that we're getting rejected from this previous area of support or demand. So ultimately everything on Bitcoin here is kind of playing to its cards. I do see a reason to come down to this previous area of resistance, maybe turning it into brief support. That's $24,000 to $25,000. And, you know, we have on-chain data that supports that idea as well, but I don't expect it to be a straight line there. I would expect us to bounce up, get these relief rallies in, and slowly work our way down. We're still, at this point, overbought on our weekly time frame. Has started to tilt down. We're about to come out of the overbought area, but there's a long way to go just yet. So we're not out of the woods anytime soon, in my opinion. Ultimately, I am looking for revisiting and coming down to the $17,000, $18,000 levels. And I do suspect, based on the fact that institutional players were selling down in November, a requirement to come down into new lower lows. That's my personal thoughts and opinions. Not to say that it has to categorically happen, just that I would personally think that it would, based on the fact that the people who were selling down here will want to buy in at cheaper prices. And these are the kinds of money and the kind of funds behind these movements that are likely to drag the price down there. They are going to force retailers to sell their Bitcoin at some point. So I do suspect personally that we'll have a new lower low, whether that is the 14K that I would like it to be, all the way down to 11, or whether we have to come down into these deeper ranges lower than 10K. I don't know exactly where that's going to go just yet. We'll find out in due course. But personally, I think 17K would be a fantastic area to be testing, fit out those fair value gaps, and we can finally move on with life. Unfortunately, I suspect we'll have to come down lower. But let me know what your thoughts are in the comments down below. This video is kind of just giving you a brief update as to kind of what I think is going on in the space. Let me know if you agree or disagree. And yeah, if you found it useful and informative, smash the like button. If you're new, subscribe. And if you haven't yet joined us in Discord, check it out, linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.